Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analyst at Trade the Chain. My name is Nick Mancini, joined by CJ and Monte, all senior research analysts at Trade the Chain. And we are here to break down everything going on in crypto, TradFi, commodities, macro, every buzzword, you name it, we will cover it. So let's kick it off with the Trade the Chain dashboard, which is pretty hot today considering the coin telegraph news that we'll have a laugh about in a little bit. But total crypto market cap up to 1.09 trillion. So that is positive. Bitcoin up several percentage points. ETH noticeably a little bit weaker than Bitcoin. I know Monte will have something to say about that in a little bit. Also, Bitcoin sentiment much more bullish than Ethereum sentiment. So ETH BTC chart, we'll definitely chat about that later. It's there's some interesting tidbits there. Also, tweet volume is up 30%. And if you've been watching the show habitually, trading volume has been hovering, in that 20, 30, maybe 40 billion mark. So we picked up trading volume quite a lot in the past 24 hours, likely due to, of course, the Cointelegraph spike, but more volume, more liquidity, more interest is definitely what you want to see for prices moving higher. So all alts are absolutely insane today. Like we just listed this core asset up 73%, which is quite crazy. There's not too many crap coins that are hurting today, so no point in really digging into that too much. But I did see a lot of stablecoin inflows recently, so maybe this little short rally that we got can spark some longer interest heading into the week. So one final note that I want to make before we move on, because this may impact kind of how we talk about price action into the week. Jerome Powell speaks at 12 p.m. on Thursday. And if you can kind of see this list, we have a lot of Fed speakers. We have Fed speakers pretty much every single day all week, which is a bit unusual when considering we have the next FOMC meeting on November 1st. So they've clearly got something that they want to put out in the market. So it's very much worth listening closely to them, because if they form a consensus with their words, it may give an indication of what we can expect on November 1st. And then you may be able to kind of front run that trade or predict with a greater accuracy what may come, for some swing trades. So let's kick it back to the dollar, which is where we've started. And CJ, I'd love to kind of know what's going on the positioning side of things, because this does potentially look like a lower high forming on a higher time frame. We're on the 12-hour right now. Obviously, we still kind of have this demand zone to contend with if it does get down there. But lower high definitely concerning for the bears in the room, because everyone was kind of leaning on this trajectory to push prices lower. And if this obviously heads lower, it would make sense that prices end up heading higher for risk assets. So is there anything interesting on your side of the terminal, CJ, as it relates to DXY, or Monte, if you've got something as well?
Yeah, I was just going to say, I think it's important to remember that during these crowded trades, correlation breakdowns can occur very rapidly. You kind of saw that in gold. But as far as the positioning, large specs actually came in and bought the dollar last week, as you can see by that bullish engulfing candle that we had, whatever day that was, Tuesday or earlier in the week. But ever since then, there's really been no follow through. And so the risk to reward opportunities in my mind, and Monte, I think, would agree with that, is looking at various short dollar opportunities. And I think the best way to play that is based on the crowdedness of shorts within the Swiss franc. So that's one we've really been focusing on. But yeah, I mean, the dollar, I have no idea where it's going to go. It could go up or down, but the risk to reward right now is to the downside. And presumably, if it continues lower, you would see risk assets, go lower as well. But there's not a lot of steady correlations right now. You see energy moving around, doing its own thing, kind of independently. You see kind of a similar thing in metals. So a lot of these correlations are a little rough right now. It's tough to glean a lot of info, but that's my general take on the dollar. Would love to pass it to you, Monte, if you have anything to add to that.
Yeah, no, I think that's a great breakdown. But I think that you really can't just, analyze the dollar in a vacuum. You need to look at the other markets and the positioning within those markets. And, we talked about it this morning, things like the Dow reaching record levels of large speculator shorts, I mean, that tells me that we could plausibly go higher, being the contrarian trader that I am, and that would mean a lower dollar. Now, like you said, we see correlation failures quite often, but I think that one thing that we could plausibly see is the dollar continuing to fall and equities continuing to rise. The Nasdaq honestly doesn't look that horrible if it can reclaim that lower high that it set back in September. I think that, maybe we see a bit of positive price action, and the dollar giving back here and retracing towards that moving average, I think is what we need to see in order for some risk on price action to occur. And of course, I think that, Bitcoin would benefit from a pullback in the dollar as well. So because of the fact that many of the major markets are crowded to the short side, like we talked about this morning, CJ, you mentioned the Dow reaching a record number of large spec shorts. We also saw retail traders flip short. They tend to be wrong, which means
if you were to put the chart, I did post this in Discord, but looking at the retail traders in yellow and how they've traded the NASDAQ this year, it's been so awful how they've traded it. Like they were short the entire way up, got long right at the top. But sorry to interrupt. I just think when you kind of look at like the worst group of traders, it's interesting to fade them. And, NASDAQ has definitely been that way in retail. So why not in Dow, right?
Yeah, exactly. And and you made this point this morning, but I just want to reiterate it here for anyone that missed it. The Dow is showing the most, resilience here to the downside, and the Nasdaq is definitely showing the most volatility. And I think that will translate to the upside as well. When price starts going, in the upward direction like it is today, I think it's normal to expect the Nasdaq to outperform both the S&P and the Dow pretty significantly, just based on the higher beta performance we've seen all throughout this calendar year so far.
All very good points. And the last point that I want to make on the dollar is, hindsight's 2020, but this is why it's always important to watch out for divergences, whether they are bullish or bearish. And you had very clear 12-hour bearish divergence here that is obviously playing out. And we now have a stock RSI cross right here, which historically, leads to a stock RSI reset, which, can, breed some bearishness. So what I would like to see on the way that I'm tracking the system is, considering the RSI is now lower, it did not crack beneath, this 45 level for months. And now it has on the 12-hour chart. So if this stock RSI resets and RSI kind of resets as well, I have a feeling that it's going to be right around this 105.5 level. So if we end up dropping back here and we bounce hard and reclaim this level, then I do think that the dollar still has a chance to head higher. And that would be much to the chagrin of many bulls as we head into the new year. But higher for longer is certainly a narrative. And we do obviously have FOMC November 1st, which is, going to be right around this area. Going to be right around this area. And then we also have Jerome Powell and friends speaking, this week. So it'll be, I think, watching the dollar, marking out some key levels, especially with whatever indicators you're using, is probably a very good idea as we head into, more Fed speakers and more conversation around rates and inflation, unemployment, et cetera, et cetera. But, CJ did, was correct. And we talked about the NASDAQ and equities look really good right now. We're now back above the kind of bull bear level that I've had in the sand, which is 43.78. And if we zoom out here, if we can get back above that level, obviously we still have this high to kind of contend with. But I do think if we can close, a 4-hour, 12-hour, something above 43.78, I would be shocked if we actually didn't start to kind of test liquidity in this kind of order block up here. This is basically just one giant order block. So if you can get, above here, obviously you still have the 44.30 to contend with, but then things start to look really good. So are you guys of kind of the same mindset that, this liquidity up here above 44.30 is probably going to get tested sooner rather than later? This does kind of look bull flag-esque in my opinion. So what are you guys thinking, CJ, Monte?
I don't know what it means to grab liquidity overhead.
So this is basically one giant order block. So you have, if I kind of pulled up my SVP.
I would like to do some Morpheus stuff after this as well when it comes to technical analysis. I'll show you what I mean by that in a minute. And Monte, I know, is probably shaking his head.
But as you can see here, I mean, it's kind of tough to zoom in. My chart doesn't look that great, but this whole area right here is that's where orders were taking place, and so that's kind of your fair value is between the 44.50 and kind of up here towards 45.20. So when I say like grab liquidity, these are a lot of stale orders in place. So you could still have shorts from all the way up here. You could have longs that are still trapped. Probably less likely, but this is where a lot of trading took place. And so that's what we call a giant order block. And you can Google order block strategy. I should probably put something in the Trade the Chain community about it. But if something breaks out of the OB, like we're in an OB right here. So if we break out of the OB, we'll probably move to the next OB. And the next OB is obviously wide, and that's why you want to test liquidity. And this is more like long-term trading strategies because you're looking at these more on the 4-hour, the 12-hour, et cetera. And obviously my chart's getting very hairy here. But you can sometimes just eyeball order liquidity because it'll just be a very clean range where price either was bouncing out of, got rejected back into, or accepted out of, and then formed a new order block. So my thesis is that we will end up testing liquidity up here, which means if you're longing on a break above 43.76, then you've got a pretty wide range of where you want to close or continue to compound. So that's kind of the way that I think about it.
My question would be, like, how do you use these order blocks or these stale orders? Like, first, how do you know if there's still orders at those levels? Second of all, how do you use those to find where risk reward is in your favor? Because arguably you could put forth the motion that a lot of short-term price action is due to like randomness, but
yeah, so
I don't want to get too bogged down in this discussion. I want to move on to other stuff, but
no, I mean, I think it's a good question, especially the way that I talk about it. So right here we got order blocks. So this will be, so if you actually go and compare like the volume weighted average price and the like the tensor charts and things like that, you'll see a lot of liquidity. What I call liquidity is just where a bunch of orders happened, right? This is where just a massive amount of trades took place in between these ranges. Every time it went above this range, it sold off, and below it got bought back in. So, and then finally it accepted lower. And then this is now giant order blocks down here. So my thesis is, and that's why I said we kind of have this high still to contend with. But if you break above, then you're going to start trading up here, right? And then it goes above and rejects, then you know that the order block is still where price kind of wants to stay. And then as soon as you accept out, like this was a fake out, then we got an acceptance, and then you can trade that all the way down because now you have an engulfing and you're out of your order block. So then you'll eventually find liquidity lower. And it started to find liquidity just where it broke out the last time. So that's kind of how you can, I'm kind of speed running through this because you are right. We shouldn't be spending a whole lot of time on this, but it's basically just where a massive amount of orders took place. And there's indicators to help you with those, like the SVP, VRVP.
Oh yeah, I mean, we used to use that. Yeah, volume at price. We used to use that all the time.
So now I need to reset my charts and stuff. So yeah, that's just how I think about things. Is once it breaks out of this piece of crap range, it'll find a new range, which is typically where a previous range took place. And that's just probably the simplest way to say it. Well, we can move on.
Roger that.
I know Monty's eager to move on. Go ahead.
I want to talk about Bitcoin. I mean, like, listen, today was a big day, regardless of whether or not it was fake news or real news. It doesn't matter. Price, price is the truth, right? And I think what we saw today was a clear example of demand. And I think Daddy-O puts it quite succinctly here. It looks like the spot Bitcoin ETF was not priced in. And I agree. And I think now that we had that fake news and that rush to buy Bitcoin, we can kind of see where you can expect Bitcoin to go, or where their fair price might be after spot ETF approval. And that's where we wicked up to being about 30K. So one thing that, you can talk about order blocks or volume at price, all of that is good stuff. But what I like to do is just simply trade setups that have good defined risk and reward. And I think right now, looking at Bitcoin, you have that, because we're breaking above the 200-day moving average. I've said for days now that it's going to take a substantial catalyst for us to break above the 200-day moving average. Who is buying at these levels? I think today we got that catalyst, even though it wasn't, realized. I do think eventually that iShares ETF will be introduced to the markets. That will give, we won't see an immediate jump in price. We'll see a slow grind up, but it will be an on ramp for more institutional and larger, institutional side investments into Bitcoin. So, in the short term, this setup I think looks pretty good. You buy here, you cut below break below the 200-day moving average. You enter. I had this, set here. It's broken above it already on the daily chart. We're still grinding higher despite the fact that this news was fake. So I think we could, if you didn't enter this Bitcoin trade this morning, or if you didn't enter, shout out to CJ for, publishing a trade insight on yesterday at 155, buying Bitcoin here. He says, good, again, just good defined risk there. You know where to cut it below here. You're wrong, so you cut it, but this was the more likely scenario. That was the path of least resistance in my mind, and that's exactly what we saw play out. And I think we can see that continue to play out. But CJ, looks like you have something you want to say.
I was just going to say, like, in hindsight, it would be very easy to say, oh, you're just lucky. Like, if this news came out, like, if it didn't come out, price would not have made that move. And so that I would say, yeah, like, you're exactly right. No one could have known other than the intern and Rollbit, maybe. But the whole point of this over time is to put yourself in those positions and to stick around long enough to get lucky. Because over time, when you can be successfully identifying positions which have risk reward to the upside or to the downside, whatever direction you're trading, just taking those setups over and over again, it's going to result in, paper cut losses. And occasionally something weird will happen, like the situation in gold last week, or the situation with Bitcoin. And Monty's right. We might still see continuation. We've gotten a little bit of a taste of what a real ETF might look like. And if to say, Bitcoin went up 9% on this news, imagine what it would have done on a real ETF. Would have there been follow through to end the day up 20%? Probably.
I think so too. Yeah. And that's a good question to ask, because what's going to happen on the day that we do get it approved? I think at least we know, I think the most conservative estimate is 30K, because a Cointelegraph tweet sent it to 30K. So, genuine news out of BlackRock, I think, sends Bitcoin above 30K.
Well, I think it also depends on what happens into that. Like, let's say Bitcoin moves random, like over a week, it moves up like 10 grand, and then the spot ETF launches. At that point, we're probably selling the news, right? Like, you're not buying a good CPI after prices go up 5% into CPI typically, just to kind of use an example that crops up every month. So I agree wholeheartedly with your guys' outlook, but I think it also depends on price action into that event. Because obviously, if we ran to 30 or 31K this morning and then the Cointelegraph news dropped, I think you would probably see a little bit different price action. So that's just my one caveat, because I do agree. I think it's bullish regardless, but it's just, if someone starts front running, then it's going to not be exactly what you expect. But if nobody's front running, then it's going to be exactly what you'd expect. So.
Yeah, let's not forget the market's just a discounting mechanism. And if it starts pricing in an ETF approval, then I think it will be pretty obvious. And But then you do have the long-term ramification of like passive equity flows, where we kind of made that joke about how boomers will be psyoped into owning Bitcoin in their, their 401ks. They don't even know they have it, but they do because a small amount is allocated in this ETF. So, yeah. Anyways.
Yeah, that's why it's always a good idea. And I put in the TTC community, if you're watching and you're a member in the announcements channel, we put in there how to get a AGGR ticker tape up so you could see different exchange interest as well as spot and perp cumulative volume delta. And so, if you're seeing a lot of spot buying week over week over week, and someone's kind of putting on a TWAP bid, then you're kind of, something's coming. Someone's obviously buying in anticipation for something. So you can kind of glean some insights out of stuff like that too. But it does seem like we're in the season for, anticipation for a Bitcoin ETF. Because I think what was January was kind of the assumed date on the streets, just because that was when the final deadlines were starting. And the assumption was that, if one gets approved, they're probably going to approve multiple. They're not just going to pick one favorite and kill the others. So we'll have to, we'll see how that goes. But, the countdown is now on into January, and we obviously could see news before that, considering the SEC, what the judge in the Grayscale case is going to be putting out a mandate on Sunday, or by Sunday, I should say, for how the SEC should approve a spot ETF. But in this case, it's obviously Grayscale's GBTC moving into an ETF, but it will basically give the most basic blueprint we have for the market to understand what the SEC will do to approve a spot BTC ETF. And obviously, if they've got the blueprint in their hands and they're losing court cases left and right, it's just a matter of time, right? So it'll be very interesting to watch the flow and price action. But let's discuss Bitcoin. I know, Monte, you had it up on your chart. I don't know if you talked about the trade idea you were thinking, but I think we're kind of the same mindset. Anytime you see a massive wick like this that doesn't immediately start getting sold off lower, typically, and we kind of talked about this in the context of a shitcoin someone gave us, and it jumped up, and I kind of gave the same outlook. And in crypto, this happens more often than not. At minimum, typically price will start to, dive into that liquidity up there, because you've definitely got trap longs. And you've definitely got shorts that are going to start taking profit if it starts inching higher towards their profit target. So, towards their entry, I should say. So a lot of times what you'll see is price goes back into that area. Whether it accepts or rejects is up, for time to decide. But I would be kind of shocked if we didn't at minimum see something like this. And then obviously in the best case scenario, we accept above Monday's range. And I'm circling Monday's range for you here. So we got a pretty wide range, but it wouldn't shock me if the next step was sweep the Monday high, or possibly accept above the Monday high if people are expecting some good news this weekend or after that. So I think you were thinking the same thing, Monte, but
yeah, no, I absolutely am. And I wish I could play like a little bit of devil's advocate and say that we'd see that level up at 30K kind of sustained for a little bit, but I don't see that happening. Like you said, I think there's a bunch of trapped both longs and people that are going to try and short the market pretty heavily at that level. That could be one thing that drives us higher, is like, shorts squeezing out if the equity market keeps running higher. But overall, it seems to me like we're going to go up, tag 30K, and then come back down, retrace back down to kind of where we're at right now, pre this whole Cointelegraph tweet fiasco. So that seems like the most likely scenario to me. That's how basically, that green line that you have drawn there, Nick, I think is a very, very crypto move, and is, to me, the most likely scenario.
Yeah, and also, look at the open interest. Obviously it's not that big of a deal considering how tight the range has been, but we did wipe out a crap ton of leverage. That, and usually when you wipe out a crap ton of leverage, you'll get some funky moves coming soon, because it's easier to push the price around without so much open interest sitting there. So I think that's fascinating to watch too. If this starts creeping up and price isn't moving much, then we'll definitely see an explosion soon. And obviously if this creeps up higher, and open interest goes down, then we'll know that the market was absurdly short and deserves the punishment that is coming to them. So I think that that one is also worth mentioning. And I love the for those who want to track it, the Spaceman has these set up that have been sitting here for a while. And they're great. And I think, CJ, I think question you asked, and I do have maybe I'll have to pull it out for Thursday, but there is an indicator that he coded that actually tells you the amount of shorts and interests, and maybe it's the profile. Yeah, so this actually will tell you the shorts and longs at each level, and it kind of goes with the kind of the tensor charts. It's not exactly the same, but you can see where the order blocks were and where people are short.
What is that? Is that past positions, or is that what the
so it's obviously not going to be
positioning is?
100% live. Yeah, it's definitely going to be I believe, as far as I've been tracking it, it's a few hour lag, because obviously you can see the last data we have is from the order block of
I mean, as long as it's within a day.
It is,
but
that's the previous day close is where it opened, or the last data print. So clearly all these shorts are dead right now in the water for sure. So, and smart money got long at the open, just right at the open. So, but yeah, so I may publish something in the TTC community on these, because I love his indicators and they're free. Anybody can use these. If you want to pause right here and start typing these into TradingView, you're more than welcome to. But I'll probably put something in the TTC community soon as well. But let's move off of Bitcoin and get on to the weaker asset of the major bunch. Obviously, was not unable to succumb to the wick gods on the Cointelegraph print today, but noticeably weaker, lower time frame. And I'll pull up the ETH BTC chart. Cover your eyes. But Monte, look at that target hit too. Look where the candle body's closed, right? Or we were targeting on that next low. And I'll go ahead and zoom out on the daily for everybody to get a better perspective. But so the low is that area is swept. But it's such a stale low that I don't even know if I want to play the sweep, right? Like, I don't even know if I want to get long on ETH BTC right here. Like, that doesn't technically, you could take your risk and set your stop at the low, but I think that's too much risk in my opinion. Are you kind of thinking the same thing, Monte?
Yeah, I think the only case to be made for ETH BTC long would be like a narrative driven one, in the sense that Bitcoin just underwent this fake news ETF approval, and now ETH is going to play catch up. That's something that we've seen in the past. A rising tide raises all ships, and when I think the fact that Bitcoin jumped so quickly and started to give back, and that in conjunction with stablecoin inflows, the DXY looking weak, ETH will have its time. But I don't think that you can make a really strong technical case based off the ETH BTC chart or the ETH chart for buying ETH at these current levels. It's just, Bitcoin just looks like the better buy from a risk reward perspective. That being said, looking at this chart here with ETH, right, you have defined risk kind of being where that second white line is, where you have those two white lines. Yeah. So if you were to long it, I think a move up to the 200-day moving average would be a good target. And, if it dips below that circle that Nick just drew, cut it. But I think the best case scenario, or the best case to be made for an ETH long, is more narrative driven than anything else.
Oh, here's parallel channel. Okay, I spotted something with my eyes, and I wanted to see if it actually lined up on the chart. But yeah, we literally sometimes it's almost like a movie the way that they move these prices around. But I just drew a parallel channel from the high and the low of this range we've been sitting in, and we tagged mid range to absolute perfection, which is a bit worrisome, because anytime you slap mid range and get slapped back, is typically you're gonna test the lows again. So. I guess I probably could have drawn it a little bit lower, but it's still pretty darn close right there. So, what were you saying, TJ?
Nothing.
But I always find it fascinating when mid range gets swept. So, But yeah, in my opinion, I think Bitcoin is the better asset to trade if you were to try and trade it higher. Obviously, just given by the minus 2.6% ETH, Bitcoin's up 4 and some change percent. ETH is only up 1 and some change percent. So I definitely agree with Monte. I guess I don't really even know what narrative you would want to look out for. I think the merge queue is almost zero now. Yeah, the merge queue is very, very low as well. And I believe ETH has been inflationary as well. I don't know where the little chart went. But I believe ETH has been producing more supply as of late. So I struggle with why you would want ETH over Bitcoin, especially with an ETF on the horizon. But if anybody wants to put in the comments something that's coming up, I'd love to hear it because I don't really know. So
I feel like I'm always doing the anti-Debbie Downer devil's advocate to you two when it comes to this chart.
What do you mean?
It's been same with ETH. Like they've been beat down for the last few months. Like I wouldn't buy it here necessarily, but like if you start seeing bids or that rotation of risk on into ETH, that's like a very interesting rotationary move. But then again, like I think you can also put forth the argument that I would agree with, which is like just buy the thing that's outperforming already. You know, don't try to get cute. Just, you know, a one in the hand is worth two in the bush. So they say.
Yeah, I mean, if this week this low holds, you know, it might not be the worst trade in the world, especially as people play that catch-up trade and with, you know, Bitcoin not having too much news, and it's like, oh, you know, maybe this looks good and we can trade this back up to, you know, close to 0.059 or 0.06. But if it breaks underneath this, then it's just going to be a slow roll down to that like 5-cent level. And then that's when things get really sketchy. So, but CJ has an opinion. I feel like we said this last week. We were talking about like every time we mention that spot CVD is just sell, sell, sell. When we finally make that grand announcement is when things reverse. And that's literally what happened after last Thursday, after we had that conversation. So maybe the fact that we're dissing ETH is, you know, time to maybe take the contrarian perspective and trade that sweep. But I would wait for, you know, a confirmation and it holding this white line before making a trade, in my opinion. So that being said, I think that's it for me, kind of with how I'm looking at things. I think in the grand scheme of things, unless you really wanted to take a scalp long on Bitcoin, which I don't disagree is pretty good plan right now, with maybe the stop at kind of the low after the sell-off, the Cointelegraph sell-off for a scalp. But you could probably just take the afternoon off and come back at the U.S. session tomorrow, which should be pretty interesting after all this volatility. So
all right, are you guys ready to get red pilled?
Yeah, let's hear it, Morpheus.
Okay. So I've been Monte, you should try this. I don't know if you've already tried it already, but you know, in Fooled by Randomness, he talks a lot about the Monte Carlo randomness generator. TradeStation has really nice on their platform, has a Monte Carlo engine generator. So you mess around with these and you think about the technical strategies that you talk about, and you can actually run them through back tests, and you look at how they will respond to various sets of random data. And the thing that I think is so important to understand as humans, let me pull this up. I tweeted this the other day. One of the reasons why we have been able to adapt and survive over the years is because we are really, really good at pattern recognition. In fact, we are too good at pattern recognition. Also, we are naturally conditioned to be more risk takers. Monte, you've made really good points about this, about how you think about our ancestors, the ones that survived, were the ones who took risks and left the cave. So when we take risks, we don't understand how financially destructive they can ultimately be. We underestimate the risks in the long term. And also, we find patterns within pure randomness. These are Monte Carlo generated, assets, and they have uptrends. They have double tops. They have, sweeps of the lows. And it's like, what are we really looking at here? Is it just completely random data? Like, what is the validity of a 200-day moving average or a support level? Like, at the end of the day, the only thing that we're doing is finding situations where the risk to reward is optimal and then cutting low losses. And if it actually makes money, then just getting out of the trade once the positioning is neutral and the edge of the trade is eliminated. So, I like the concept in the book. Nassim Taleb talks about, as a trader, you're really just a practitioner of randomness. And if you don't understand that, like, it's very, very serious because of such the high failure rate of people in this game. Even if you look at bank traders, after 3 years, 95% of traders who are at banks trading FX are gone within 3 years or are not going to be profitable over time. So, I think it's important to greet this stuff with a healthy degree of skepticism if we're truly going to be empirical about it.
Most definitely. I think that just looking at a chart in itself can't tell you that much, but the thing is, once a lot of people look at that chart and look at that indicator, then it gives it a little bit more credence or stopping power because, now everyone's looking at this, everyone's using it as their target, and it becomes, somewhat less random and more of a human psychology element to it than just purely, technical.
That's an excellent point. However, what if the vast majority of people are often wrong and their perception is inherently flawed?
Yeah, that's a great point. And that's why, we tend to take on a contrarian perspective for the most part when we see retail get long. For example, the CHF, the Swiss franc trade that we're in, that was on the basis of 1, defined risk, 2, positioning of traders, right? Those are the 2 major things to me that matter the most. I don't care about volume of price or anything like that. As long as I understand the positioning of the traders and I have defined risk. You talked about it earlier. Like, think about it on the flip side. You need to put yourself in a position to get lucky. And like my favorite soccer player, or one of my favorite players, Erling Haaland.
I love this.
Yeah,
I love this analogy.
No, this is great. He broke the record for the English Premier League for most goals scored in a season last year. And a lot of people said that he's a cherry picker and he's just in the box and anyone could score those goals. But it's about putting yourself in the right place at the right time. And he is the best in the world at that. He's a natural born killer in the box. He knows where to be at the right time. And, although some of his goals may be tap-ins, he's getting himself open, putting himself in that position to benefit, from the prior work. So you need to maybe there is an element of luck involved, being the ball getting served into you, but you need to put yourself in those positions. And I think that the same thing, how you talked about earlier, you can say that in hindsight, you got lucky with the Bitcoin trade. I think you can say the same thing on the opposite side. When we're talking about things to the downside. So just an analogy to throw out there.
In the short term, I think it's definitely luck, but in the long term, luck has nothing to do with it. And Monte, I thought you were going to tell the story of you and Monte was a good soccer player, really good. And what did you do that kid? Oh yeah, the men's league. You're getting in fights in the men's league. He's the guy who takes it super competitively. Anyways, tell the story of what was there, like a freshman amateur and you wanted him to score a goal and he was right by the goal and you just kicked it at him and it hit him and went in. Is that what happened?
Yeah. So it was a good family friend, and I was in 8th grade. He was in 6th grade. And he was only 6th grader on the team, and he didn't score a goal. Or no, he's a 7th grader, sorry. And I was in 8th grade, and he hadn't scored a goal, and he wasn't gonna. Yeah, right, exactly. I'm still unbelievably athletic. But anyways, so I wanted this kid to score, and it was one of the last games of the season. So I told him, just stay on sides, but just stand in the box. Just get in the box. I'm gonna whip them into you. I'm just gonna whip the ball into you all game. And that's what I did. I just whipped the ball into him all game. And he had a couple headers. And then finally I just drive this ball in. It just hits off his knee and redirects into the corner. His only goal of the season. He was thrilled. He got the game ball that game. But that,
You're a human target. Nice job.
yeah, that he basically was a human target, but at the same time, he was in the right place at the right time. Even if he didn't know it, he was. That can sometimes be the case, but with players like Erling Haaland, they're putting themselves in the right place at the right time on purpose, and they're getting on the end of balls that people wouldn't typically get to. So, you can say what you will, and Chris is right. If anyone could have scored those goals, they would have. If anyone could score 40 goals in a season, they would have. But no one has besides him, because he's in the right place at the right time, and I think that applies to trading as well.
I agree wholeheartedly, and that's the reason why, I always have so many lines and random crap that people make fun of me on the chart for. But I think, you have no one person will think exactly like another person. So you have to find your own setups. You have to find, how to, and let's say I take all of these off the chart, then it's just randomness. This is how do you trade this? If you don't know, anything, if you can't say, okay, if it sweeps this level, then I'm going to take a short, or if it sweeps that level, I'm going to take a long, or if, we see rejection here, I'm going to go long. So, you can start to build some of that, but unless you have, a method that works for yourself to take away from the randomness. And I think CJ also has a good point, is we're all highly intelligent, kind of ape-like characters who attach value, and we're all kind of thinking the same thing. And so if everyone's looking at the 200-day moving average and it's generally accepted, then that's it's going to matter to some degree, because everybody's watching it, obviously, plenty of times in the chart. So I think, figure out whatever works for you, adapt, take good things from other people's strategies and adapt them to yours. So if maybe you don't need as many lines as I do, but maybe you should still be drawing out support and resistance and looking for sweep opportunities and doing things like that, because then you can have a more full range. And of course, I love confluence as well. Anytime like moving averages match up with VWAPs, like usually, right here, great rejection short. So, CJ's right. You have to look for, some sort of harmony in the chaos. I think the entropy theory, I think, is what they call it in the the MITs of the world. And you have to find some sort of patterns or some sort of harmony in that entropy. And then you have to eventually remove your bias and rechange that again as you're being given new information, which also creates more entropy, because if information is colliding with something that's generally accepted, starts to it's planet formation, but just for human thoughts and ideas, if you want to think about it from a purely scientific perspective. But all great points today. I very much enjoyed hearing you guys' input on
Brownian motion, I think, is the buzzword for that when applied to markets. Anyways, let's
good point.
Wrap this up.
Bring it home. But that is a good point. Let's go ahead and wrap this up. Unless I don't think anyone has any trade callouts or anything like that. But thank you, Vincentini, for being in the chat with us today. Love your participation, and shout out Wii Daddy-O. Been seeing you in the chat a bunch as well. So we very much appreciate you guys joining along. Speaking of joining along, if you'd like to join us in the Trade the Chain community, 14 days free at www.tradethechain.com. And yes, that 14 days does get you access to the community and the data, so you can get in, start rolling, start absorbing information, asking us questions, pestering CJ, Monte, and I 24/7. We love all the tags and the questions and the conversation we get. So please feel free to hit us up. And then one final note is, of course, we're working with BingX and Didex. So I got my kind of fingers crossed there. But BingX centralized exchange, Didex decentralized exchange, links in the description channel below, with discounts, with benefits, with additional things that you can earn through trading using those links below. So you're not just paying fees, you're getting something back, you're earning on top of your winning trade. So with that being said, good luck.
Could I say one last thing? This is just something that I was talking to you guys about that I want to make the community aware of. We still do have some viewers, but one thing, if you are a Trade the Chain member, something that I want to start doing, we'll probably do it if there's something interesting going on in the markets, but I think hopefully maybe once or twice a week, I'd like to have like open discussions within our Discord just through voice chat channels. So that'll allow members like you guys to have an open mic to be able to ask questions. Basically, it's the same. It would be the same format as like a private Twitter Spaces, and we'd, let you know beforehand. But I think that's a really good idea to enhance the participation within the Discord community. A really good way for you guys to share ideas and be more personal. Because I mean, we've been friends with Chris for years now. I don't know if it's been a while since I think we've ever talked. And it'd be fun to just shoot the shit about markets and see what you guys are trading. So I think that'd be a really good thing for community building. And let us know if you have any feedback or any ideas that you think would be good for the community or could currently improve on stuff that we're doing. But I hope we can do that and you guys enjoy it. But that would be another shill point to join the Trade the Chain community, is the personalization element.
Good point, CJ. Appreciate you bringing that up. So if you are interested in that, again, 14 days free at www.tradethechain.com. So with that being said, good luck, happy trading. See everybody on Thursday.